Trading has ended Tuesday, 2nd of May. Let's have a little look. So I've removed the path because the chart was getting a little messy, but I've left the main trend lines on the chart. And I also drew an upper trend line, which is doing this huge downward megaphone. We call this a megaphone. I've left the anchor, and as you can see, price action could not reclaim this 7885. And I've said in the last several videos, when 7860 support is lost, the path is to the bottom of this trend line, which we kind of tagged today. Now, this is probably the most dangerous time when momentum has moved and then you feel like, okay, I want to try and catch this move now. Because right now, this is literally no man's land, and it could go back up one way or continue straight down. So I would always advise patience and caution. So looking at a bounce, because it's putting in a 4-hour candle bounce. Now, if you remember the previous support of 7815, this was basically where it was bouncing back off. You can see from this 4-hour hammer here is the likely destination of where this bounce will get to. Now, what it does around this area will be extremely telling. So watch out for this zone. It's a very important zone. It could either continue and try and hit this 7860 again. If it does that, then this is called a fake breakdown. Or it could hit this 7815, 7820 area and continue its path downwards. Firstly to the gap, maybe another little bounce, and finally to target 2. And target 2, as I've mentioned again several times, is this 4-hour 200 MA at 7703. So should we continue the path downwards, then that is where I will either take my profits or tighten my stop losses. If you're thinking of entering now, I would wait to see what it does around this 7820, 7815 area, and then make a decision. Wait for a confirmation, whether it's a 1-hour reversal candle or 15-minute reversal candle, depending on what timeline, what time period that you work with. There's another chart. I like to swap charts because it gives me a different perspective sometimes. And it looks, nice, clean breakdown. We've got a gap at 7750. There is one below, which I've mentioned before, and it was the bounce gap from when the initial banking crisis regained all its losses, as you can see. And now it's breaking down, back down. Whether it goes down there again, I don't know. We'll take it a level at a time. But my main stress, I guess, to anyone thinking of, catching more of the downside is wait for the bounce. This 7820, 7815 area is important. See what happens when it gets to there and then make a call. I would also re-stress that this 7885 is now major resistance because of this breakdown. So good luck trading. That is my chart observation for Wednesday, the 3rd of May.